Hello, good morning, and you're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwal, along with me, Cheryl D'Souza as well. Very good morning to you as well, Cheryl, and happy Friday to all the viewers and you as well. But market's also not bad, right? It's coming in as a happy Friday as of now as well.
Right, absolutely. A brand new series, and looks like we've started on a good footing actually. A very good morning to you, Winnie. And actually, just to take note of what we are wearing shades of yin yang. That's exactly how we are looking right now. Our chessboard also. I'm sure Kunal is going to comment that on what we're wearing today. But nevertheless, look at markets. Fine fettle as of now coming in for the markets at least. If you look at what the benchmark indices are doing, 0.3% uptick, 0.4% uptick right now coming in for Nifty. It is actually inching towards that day's highest point. Let's take a look at what actually mid-cap and small-cap index are doing. Because remember, they have been like the outperformer when it comes day after day, and today as well. They are actually inching higher. You have a small-cap index that is outperforming benchmark indices as well. 0.8% uptick coming in for small-cap index. Talking about Nifty Bank, then that's the one that's underperforming the benchmark indices. If you look at Nifty Bank right now, it is actually nudging towards that negative territory, or rather, it's recovered from the negative territory onto the positive territory as of now. Talking of the list of gainers, then you have ONGC, Tata Steel, Hindalco, Coal India, as well as JSW Steel among the top gainers on the Nifty, which means that the metal sector is actually seeing good strength in today's trading session. While on the flip side, if you look at the losing end of the markets, you have Asian Paints, Britannia, Divi's Laboratories, Dr. Reddy's among some of the losers in trade today. Let's take a look at what are the sectoral indices doing then. If you look at the sectoral indices, the metal index, top sectoral performer, 2% upwards momentum coming in for the metal index. You also have a oil and gas sector holding on to gains. Auto index holding on to gains as well. But on the flip side is the pharma index that's under pressure in today's trading session. If you look at Torrent Pharma, that one also is seeing a knock in today's trading session as well. It's an ET Now impact. So on back of that, you can see Torrent Pharma seeing downtick of as much as 3.4%. Let's take a look at what BHEL is doing, because that one is just charting new territory day after day. Today it's at an 8-year high. EIH is at record high levels, as well as ZF commercial vehicles. That one also is at a record high. But let's talk about something apart from markets. In fact, something related to markets, isn't it, Vinny, given the fact that today is Friday, is BNS and Pathshala Day?
Absolutely, BNS and Pathshala Day, and Kunal today has picked out a very interesting topic for us, and that is Relative Strength Index, that's RSI. Kunal, very good morning to you, and just talk to us about, as this index, what does it indicate as an investor, as a trader? What is it that one should actually understand from this RSI levels? What does it mean?
So thank you, Vinny, for that. Good morning to all. Now, in terms of learning technical analysis, this is the first and the most critical step of technical analysis where we use the indicators. It's the indicator which is used by most of the technical analysts on a regular basis, and that's why it becomes very important to understand and study RSI. Now, the three features for understanding RSI is that it helps to understand the speed and the magnitude of every asset class or every stock or every index which you are studying. The scale is from 0 to 100, which means the lower end of the scale is 0 for RSI and the upper end is 100. 100 is extreme or highly overbought, and 0 is highly oversold for the stock or for the asset classes. And the most important part is that the understanding of RSI could be broken down to a very simple step. Like, it determines the strength when the market or the asset class is going up as compared to the weakness when the asset class is going down. So the more the number of stronger days, the higher would be the jump in the RSI, and the drop in the RSI on the prices would lead to a correction or a fall in the RSI. Now, I've explained into a very simple kind of a phenomena of how do we understand RSI. So this is the way in which price action generally could be moving. One is a very small gradual step of moving up higher in terms of prices, and the other is very high priced action. So these are candlestick actions which indicate that the RSI over here could move in a very gradual manner, because the jump on the prices of the stock on a relative basis is very, very slow as compared to a jump on the prices over here, which is substantially higher. Same is the case on a downward trend. When the stock goes into a mild correction, the RSI goes into a gradual cool off. But when the prices cool off sharply in the second half over here is where the RSI takes a sharp knock or a sharp correction. Very simple and a lucid example over here, which I have categorized is assuming if a car has to travel a distance of say 3 times. So this is equidistant over here, and the speed gets variable, which means from the starting point towards the first pit stop, the speed is 0 to 40. The second pit stop from the first to the second pit stop, the speed is 40 to 80, and the car is accelerating from 80 to 100. Now the time span which is required over here would shorten down significantly. So the first would take approximately say 10 minutes. The second pit stop would take approximately 6 minutes, and the final destination would take 3 minutes. This is exactly how RSI works when a price moves up higher. Just to give a last slide example on the charts, I've taken a very simple random example over here. When the RSI moves from 20 to 40, the price has moved from 398 to 450, which is a jump of just 52 points on the stock price. When the RSI moves from 40 to 80, the prices jump from 450 to 820, which is a jump of less than 400 points for the stock price. But what happens when the RSI jumps from 80 to say 90 or 100 levels? The prices move up significantly higher, and we've seen the stock moving from 800 to 1755, which is a jump of more than 900 points. So that is exactly how you try and understand RSI.
All right, so that's an exhaustive actually lesson for all of our viewers on relative strength index, that is RSI. And thank you so much, Kunal, actually decoding that for us, because you have a lot of stocks that actually seem to be on the overbought zone. So you tend to basically wonder what's the next step. Will it see a sharp drop from there or no? So thank you so much for explaining that for all of our viewers. But let's also bring on board, we have Avinash Gorakshekhar also joining us on the show today. A very good morning to you, Avinash. Thank you so much for joining us on ET Now. Actually, let's take your take coming in on markets. We've entered a brand new series today. You are seeing metals actually in the forefront. Banks are underperforming the benchmark indices today as well, and it's been doing so over the past couple of days. Where do you see actually Bank Nifty headed? Do you think that Bank Nifty will regain its mojo sooner than later?
Yeah, good morning, Cheryl. See, I think the Bank Nifty has got impacted, by a lot of external factors. Specifically, yesterday we saw a sell-off in the Adani Group stocks. So I think you saw a lot of PSU stocks getting hammered, I think, on fears that there could be some sort of concern for them. But I think, this is a sentimental kind of impact. Our sense is that with a credit growth of almost 9 to 10%, I would not be surprised that, PSU banks which have been hammered down could be good positional bets, specifically, banks like State Bank of India, Bank of Baroda, Canara Bank. I think even in the private sector banks, there's been a very limited kind of action, specifically from banks like ICICI Bank or IndusInd Bank. I would believe that, if any investor has a 6 to 12 month kind of time horizon, it could definitely give a very decent kind of risk reward. And as far as the Bank Nifty is concerned, in the very near term, the trend would be negative, because a lot of negative news flows have been floating around, Adani Group stocks. Today there was some negative report for Vedanta. So I think, the markets are a little concerned that wherever these companies have borrowed a lot of funds from both private and PSU banks, there could be some, negative ramifications. But I think definitely Bank Nifty could bounce back maybe a little later, but at least for the next couple of days or maybe a week or so, the Bank Nifty could possibly try to consolidate at the current odd levels. And maybe after that, there could be a kind of a good bounce. So we are positive on banks, especially the PSU and the private sector bank, but keeping a time frame of at least 6 to 12 months ahead.
Okay, that's Avinash's view coming in on the markets, and positive on the banks, at least for a time frame of 6 months to 1 year is what you're keeping an eye out on. But on that note, viewers, we're going to sip into a very short break, but don't go anywhere, because after the break, we will be taking all your stock related queries. So do start sending us on all your queries on the WhatsApp number that will be flashing on your screens.
Welcome back. You are watching Buy Now Sell Now on ET Now, and with me today I have Vinny Motiwala, and let's bring on board our guests for today. We have Kunal Bothra as well as Avinash Gorakshekhar joining us on the show. And viewers, this is the show where we get you answers for all of your stock related queries. So do write to us on the WhatsApp number that will be flashing on your screen. But let me kickstart with taking all the queries that have already piled in. And this one is coming from Mati, writing to us from Trichy. And Kunal, this one is specifically for you. He's asking about Nifty. He's saying today Nifty increased by 90 points, but call premium is falling. He wants to understand what's the implication of that.
So that could probably happen because the premium for the index has dropped down. So yesterday the premium for the index was, I think, 140 points when we ended the day on the September futures, and I think currently the premium is around 88 or 90 points. So there's been a sharp drop over here, and also when the markets get into some kind of a breakout mode, an initial drawdown as such happens on the option front, and then you see a gradual cool off, gradual move on the upside for the option. So my sense is that this could be probably an initial adjustment. If the premiums expand back again to say 100, 110 odd points, then we may expect that the call premiums could rise again.
Okay, let's move on to the next query, and that one is for you, Avinash. And Cheryl is rightly spotting that, we all are twinning. Kunal and Cheryl are wearing black, and you and me are wearing white, Avinash. So, yes, we all are twinning today on the show. But let's move on. And Avinash, the first query is from Matthew from Muscat. And that one is, he's holding 100 shares of Maruti, which is accumulated over a period of 2 years. And the average price for him has been 7,600 rupees. Should they continue to hold this for a longer term, or maybe look to book out profits now? Obviously looking at Maruti, 10,000 is what it's touched, and above that level. So now what should their strategy be for the long term?
No, I think my guess is I think they should hold on for the longer term, because I think of late, company has made some announcement that there could be a split in the stock price. So I think that is again another sentimentally, positive factor for the stock. Plus, we believe that FY24 and 25 are going to be very strong years. Maruti already has a very strong order book, and it's all about execution. I believe the passenger car market is highly underpenetrated, and I think we could see very strong numbers over the next, say, 12 to 18 months. So I think, despite the fact that they are making a decent gain, I would believe that, if the investor can put in at least 12 to 15 months more and hang on, that would be a better strategy, as the risk reward would get better going forward. So I think it's a good decision if they can hold on. I would believe a better risk reward could be offered around, in the next 12 to 15 months. I think at least a target price of around 11,000 plus is very much possible.
All right, this one is coming in for you, Kunal. This one is from Akshay, is writing to us from Bangalore. And also, sorry, Akshay, we've not been able to take your queries, but trust me, we've been trying to take as many queries as possible for us. But Kunal, he wants to invest around 1 to 2 lakhs for a period of 12 to 18 months. He's asking whether it makes sense to go in for a PSU bank index per se to put that money in, or look to invest in HDFC Bank. Which one do you think makes more sense for him to do?
See, it depends on the nature of the risk which you are ready to take into the account over here, because with a 1 year time horizon, I'm not sure whether you'll probably see some sort of a firework from HDFC Bank. So the stock may come back towards 1700 mark, 1750 odd levels in the next 1 year or so. But that could be a best case target for HDFC Bank. But at the same time, you may probably see some stronger outperformance coming from the PSU banking stocks. But on the other hand, PSU banking stocks could be very high beta. So just in case if the market gets into any kind of a correction, you could probably see these stocks correcting very sharply. So it's all about the risk appetite over here. If you're okay with a high risk appetite, then definitely go with PSU banks. But if you're not comfortable with taking high risk, and especially if the market gets into a downtrend, much better to go with HDFC Bank.
Okay, moving on to the next query, and Avinash, this one is from Venkatesh from Indonesia. They have BSC 150 shares at a price of 512 rupees. They're a long-term investor, time holding period is 5 years. What should they do now? Should they continue to hold, or maybe partially book some of their profits?
I think BSE has announced a buyback, and I think most importantly, I think looking at the buoyancy in the capital market plus the growth in the derivative segment, I think if they can hold on for the next 6 to 12 months, we could see better upside. In fact, over the next 12 months, we hope that NSE also will get listed, and that also will add a little more vibrancy to the BSE stock, because technically, the NSE share cannot get listed on the National Stock Exchange. So typically, that is also an event which will play out. And plus, they have a very thriving mutual fund, kind of business, which is the mutual fund platform which they run. So I think there are some reports that there could be some value unlocking coming in from that, piece also. So I think it's better to hold. You could expect a further upside after a very long period of underperformance. The stock has now started moving up. So it's better to hold for the next 12 to 15 months.
Okay, this one is coming from Jaya. She's writing to us from Bangalore, Kunal, and she wants to know about your views on ITD cementation. Is it a good one to buy? And what sort of entry price can she look at for ITD cementation? We have the management today on the channel. Also, you can see the stock price is seeing a sharp uptick of as much as 12%. Do you think it's a fair price now to buy at these levels, or do you think there will be some cool off?
I'm not sure whether there'll be a cool off immediately, but I think it's always better to wait out for that cool off for stocks like these, because after such a kind of a strong up move, the stock has not even tested its 50-day moving average, I think, in the last 4 or 5 months of this uptrend. So it becomes a bit of a stretch to buy these stocks at the higher end of the price curve. I would not suggest a buy on the stock at current levels, because the risk reward is definitely not in favor. Even though the prices are in the thick of a momentum for itself, I would suggest to wait out for a correction or a cool off to enter into the stock.
Kunal, we have Parvinder Singh from Noida who wants to know on 2 stocks. One is HG Infra and Godrej Agro. At the current price for a period of 6 months, would it be something attractive to look at and buy?
Well, I guess so. I think HG Infra is something which is trading at 930 odd levels. That's a stock which has been showing signs of strength. It's been holding on to its 20-day, 50-day as well as the 200-day moving average. More of a time-wise consolidation. So I would suggest a buy on the stock.
All right, this one is coming in from Frank. He's writing to us from Bangalore. He's been holding on to Rajesh Exports, 950 shares at a price of 410 since 2011, Avinash. And also he has Emphasis, 115 shares at a price of 2,685, and that he's been holding since June last year. He wants to know both of these counters. Should he look to add some more, or look to exit, or continue to stay put with them? What's your take on Rajesh Exports first and then on Emphasis? What should he do? Do you think it makes sense, given the fact that he's been holding on to at least Rajesh Exports for the longer term? Now you think that he should exit?
Yeah, I think Rajesh Exports, according to me, has not rewarded shareholders in any significant manner. And I think they are largely in a kind of a trading business. They operate on EBITDA margins of just about 1%. And my sense is that, they have now started diversifying into a lot of unrelated businesses like lithium batteries, for which, they have taken a lot of PLI kind of incentives. My sense is that, if the investor wants a decent risk reward, then I think there are many other bets from the capital goods sector, from the automotive sector, where I think the risk reward could be better. So I think a shift to, let's say, Mahindra and Mahindra, or maybe from the capital goods says Cummins, could be a better bet. And which was the other stock you mentioned, Cheryl?
The stock. He's been holding on to Emphasis since June last year. So he wants to know what should he do with his holding right now.
I think Emphasis is a quality play. I think has a very long association with HP, and I think they have progressively, of course, reduced their dependence on HP. My sense is that looking at the kind of headwinds in the IT space, the stock could underperform for the next, say, 1 or 2 quarters. But longer term, I think it definitely appears to be quite attractive. So I think if the investor has a 12 to 18 month kind of time frame, he should hold on. Good value could come in provided he takes a longer term kind of time frame there.
Okay, Kunal, Sana from Chennai has 2 queries. One is on Shopper Stop. They're holding 60 shares at a price of 706 rupees. Near term, how is this stock looking? And the other one is 100 shares of Gulf Oil at 569 rupees. What should they be doing with this one as well?
So Shopper Stop has gone through a correction. I would probably believe that the stock may correct a bit more from current levels. It's below the 50 and the 100-day moving average. So I would probably wait out for a correction, at least another 40-50 points. 675 is or thereabouts is where you can look to start nibbling into the stock price. For Gulf Oil, again a stock which has run up exceedingly high. I would probably expect, because of the RSI divergence on the daily charts, I would probably expect that you can look to buy closer to 145. So for both of the stocks, I would suggest to wait out for a decent correction to enter.
All right, the next one that I have is coming in from Balan. He's writing to us actually day in and day out, and we have not been able to take Balan's queries. I think I have just missed the query. Okay, so here it is. Okay, he's asking about Mukund and BHEL, Kunal. He's making 20% plus profit in both of these counters. He wants to know whether he should exit out of them, book out profits, and instead park that money in Schneider and NTPC.
NTPC could be a good bet. I have not tracked the charts for Schneider, so I'll probably not comment on it. But I think NTPC could be a good bet. The stock has given a breakout of a major resistance today, and it's been a consistent moving stock over the last 3 to 6 months. So I would probably go for NTPC from the 2 names that you mentioned.
Right, but so should he exit Mukund and BHEL both?
Yes.
All right.
Okay, let's move on to the next query that is on Cummins. And Madhuri, Avinash wants to know on the fundamentals of Cummins. The stock has fallen. So, are there any red flags, or can one look to actually buy Cummins now for the long term?
Stock has attracted a little bit of profit booking, and I think as far as the order book is concerned, the execution is concerned, I think numbers are going to get better in FY24. I think the India corporate capex story is extremely strong, and with more and more execution happening, I would not be surprised that FY24 should be a lot better than the previous year. I believe this is a good opportunity to accumulate, considering the fact that a large part of Cummins exports are to its subsidiaries abroad. So I think the export market is also doing well. So I think if the investor has a 12 to 18 month time frame, definitely Cummins should be in her portfolio. Obviously, any decline should be used to add positions.
Now, this one has come from Anand, writing to us from Gurgaon, and he has 260 shares of Tata Consumer, price is 775, and also he has 220 shares of Airtel at price of around 820. He wants to know whether he should hold on to these or average for the short to medium term.
Hold on to both of the stocks as of now. I'm not sure whether averaging out could work for these names because they are very low beta stock. Price wise, yes, these stocks have come back towards a good support point. Like for example, Tata Consumer is closer to 820 and Bharti Airtel as well. I think the stock has come back towards the 850, 860 mark, which is the near term support for the stock price. So price wise, yes, they are attractive, but I'm not sure that with the near term sideways range, whether the timing of the buy could be perfect at current level. So I would just suggest to hold on to the existing quantity.
Okay, and on that note, viewers, we're going to slip into a very short break, but don't go anywhere because after the break, we will be taking more of your stock-related queries.
Welcome back. You're watching Buy Now Sell Now. And currently, as you can see on your screen, it is Happy Friday over here, at least in the Buy Now Sell Now studio. Our producer Abhishek has definitely noted the fact that Kunal is too happy doing the BNS and Pathshala. Therefore, Kunal has decided to, upgrade his wardrobe and actually twin with me with the black. We're looking like a chessboard, aren't we?
Really, we are.
But I think since everyone's chess is on everyone's mind, given the fact that we also had reached that finals as well in the Fight Cup. So maybe that's the reason why, isn't it, Winnie?
Absolutely. That's the reason why we could put it on that. But yes, surely twinning over there. But let's get and keep it going actually with all the stock related queries then. And, Kunal, I'm going to come to you with this next one. And this one is from Ron. They wanted to know on PNB Housing Finance, how is that one looking for the short term?
Well, it looks very attractive to me on the charts. In fact, most of the housing finance companies have gone through a big revival for themselves in the last 3-6 months. Even the case with PNB Housing, the stock has recovered quite smartly. 6 months back, I think the stock was almost at 400 and it's come back towards 650 mark, which is a good 50% jump for the stock price. Looks very attractive, and if you're a high beta or a trader with a high risk appetite, then I think you should look to park some money over here.
All right, a quick note for all of our viewers. In case you are not able to watch us live on your television channel, you can also catch us live on etnownews.com. You can catch the coverage live on that particular on the website as well. But this one is coming in from Gauri for you, Kunal. Once again, Adani Ports, 400 shares at a price of 550 rupees per share. Wants to know whether she should continue to hold on to it or look to exit.
I think you should continue to hold on, even though I think the group has gone through a lot of news flow recently, as well as over the last many months. But the fact that your cost price is at 550 approximately, I think is a very good cost price for a stock like Adani Ports. It's a very stable name as compared to most of the Adani pack, most of the stock in the Adani pack. So I would probably suggest a hold.
Avinash, we have Bisakha from Kolkata, who's a long-term investor, has two shares. One is Nazara Tech as well as the other one is United Spirits. Now, they have 20 shares of Nazara at a price of 682 and United Spirits at a price of 844, 20 shares. What should they be doing with this for the long term? Should they continue to hold or maybe look to book out some profits here?
I think both Nazara as well as United Spirits, I think both are good long-term bets. I think Nazara is a very well-known player in the gaming segment. And probably, I think now things have improved. The company is gunning for very strong growth over the next 2 years. So I think Nazara Technologies should be held on. I think my sense is that this is one play where possibly it's a fintech company which is operating in a very niche segment. So I would suggest that here I think the investor can take a 12 to 15 month horizon and hold on.
Right, this one is coming in from Sai. He's writing to us from Dubai. And Kunal, he wants to know about Manappuram Finance. 18,000 shares at a price of 125 rupees per share. And along with that, also Coal India, 10,000 shares at a price of 180 rupees per share. He wants to know 1 year view for Manappuram, 2 year view for Coal India.
Extremely bullish on Manappuram. I would suggest a hold on the stock price. My sense is that the stock should recuperate the entire loss from those 200 levels, which it had seen for itself, I think, a couple of years back. So I would suggest a hold on the stock. For Coal India, I would not be extremely optimistic. I think there are far more better PSU names. So I'm not sure the exact rationale of buying Coal India and whether this is the only stock which you have from the entire PSU pack. But if that's the case, I think it makes sense to at least switch part of your allocation from Coal India to many of the other names. Something, for example, which you've been recommending earlier, BHEL, BEL, PSU banking stocks are looking fairly attractive at current levels.
Avinash, Satya has a query on the hotel space, one specifically on Indian hotels. They want to know, is it a good strategy to actually sell Indian hotels now and maybe look to buy Orient hotels because it's available cheaper? So fundamentally, how would that strategy be?
I think, see, Indian hotels and Oriental hotels, first of all, cannot be compared to each other. Indian Hotels is one of the largest hotel companies in India. And I think, with the G20 summit till November, the World Cup happening in October, I think you're going to see a lot of traction in the larger hotel companies. My sense is that even Oriental Hotels, is a Taj, managed property. Definitely is doing well, but in terms of the scalability and in terms of the profitability potential, Indian Hotels is a much significantly large player. So I don't think one should switch Indian Hotels for Oriental Hotels. Although the stock price has risen significantly, we believe that over the next, say, 12 to 18 months, we could see higher levels going ahead for Indian Hotels. So I think continue to hold with Indian Hotels. If at all, you can buy separately Oriental Hotels for a additional hotel play in your portfolio.
Okay, this one is to you, for you, Kunal, and this one is from Ashish. He's a great fan of yours. He's thanked you for BHL because he purchased that stock on your recommendation at 86, sitting on a very healthy profit on that particular counter. Now he wants to know about Minda Corp. He's already purchased about 1,700 shares at a price of 299 rupees per share. He wants to know your view on this one. He's saying that he is a long-term investor, but Minda Corp, do you think he should stay put with it because he's already making decent amount of profits?
Yeah, I think you should consider holding on to the stock. I would probably expect that the stock is a more stable kind of a chart. It's not shown any major volatile moves or sharp corrections, and I think that could be the best way in which a stock stabilizes and moves up higher and keeps on riding or continuing its uptrend. So I think no reasons for at least on a short-term basis to try and exit the stock. You can continue to hold on.
Kunal, one more coming your way. This one is from Badri from Bangalore, and they want to know Equitas Small Finance Bank and Ujjivan Small Finance Bank for a period of 3 months. Is it a good time to invest in this?
Well, not from a 3-month perspective, but if you can expand your time horizon to say at least 1.5 to 2 years, then I believe that these stocks can see a substantial up move. So what's actually happened is that both of these names, Equitas Small Finance Bank as well as Ujjivan, they've seen a substantial rise from their March lows, a gain of more than I think 40 to 50%, or in many cases I think more than 80% for these stocks. So I think after such a kind of a time span, you can't expect the stock to replicate similar performance in another 3 months. So you'll have to expand your time horizon to gain substantially.
All right, this one is coming from Chandrasekharan, wants to know about Tanla platform. He has a 1-year view. Actually, let me take another query then. Let me go to Avinash then. This one is coming in from Vishwanathan Nair. He wants to know about what is exactly happening in Venus Pipes. He's saying that the stock is soaring day by day. What's the outlook on that one? Venus Pipe is the stock, Abhishek. So, Avinash, do you think fundamentally this particular stock merits such a spike in its stock price, or do you think that one should not look at the stock?
I think, see, the company has been doing very well in terms of numbers, but I think the valuations have become a tad little expensive. And I think ultimately, most of the pipe manufacturers are B2B businesses, which are commodity driven kind of businesses. So I think, valuations have definitely taken off quite significantly. So I think, if the investor wants to buy fresh, then I think he should wait for some more time. I would believe that, if the stock is available at a reasonable good price, entry price, then only I think one could make a lot of money here. But at the current levels, I think it's a hold. Fresh buying is definitely not advisable.
Let's move on to the next query, and this one is on Zen Technology, Kunal. Mr. Singh from Pune wants to know the technical level for Zen Technology that one should look at for the medium term.
Well, I don't track the stock that often, so I'll probably give it a skip.
Okay, Kunal, let me come to you then. Tanla Platforms, I'm sure you tracked this one. Then let me take it for on behalf of Chandrasekaran. 100 shares at a price of 1,220. Should he average at current levels, or should he look to wait for more correction? He's saying he can hold on for 1 year. Tanla Platform, this particular stock has not performed well if you see over the past 1 to 2 years. What should his strategy be now for this particular counter? No doubt in the last 3 months, he's tried to recoup some of those losses.
Well, yes, the stock had come back towards, I think, 1300 odd mark in just the last month or so, after falling down to as much as, I think, 500, 525 somewhere in start of 2023. So it's tried to recover itself. I believe at current levels of 950 also, the stock is on the verge of critical support of a long-term moving average. So if assuming the stock holds on to this level, which I think is around 920 for the stock, then you could see a reasonable bounce back on the stock for Tanla. So I would suggest that maybe closer to 920, you can give it a another averaging out opportunity, and then wait out for targets on the upside to at least 1050, 1100.
Avinash, Khadir from Hyderabad has two stocks. One is Borosil Renewables, which he's bought at 540 rupees, and Syngene International bought at 580 rupees. For the long term, what should their strategy be for these two stocks now?
I think as far as Borosil Renewable is concerned, I think he should take a long-term view. See, I think they are into definitely green energy kind of equipment, and I think the company has recently gone in for a massive expansion. So you're going to see a lot of throughput coming in out in the next couple of years. You need to have a little bit of patience here because the stock has risen from very low levels. So I think if the investor has at least a 12 to 18 month kind of time horizon, he should definitely look at averaging more, or maybe looking at a slightly longer term view, because the business fundamentals are strong. The product which the company makes is an import substitute, and there's an ample amount of demand which is going to come in over the next couple of years.
As you can see on the side of your screen, there you go. Royal Enfield is all set to launch that Bullet 350 today. Remember that you had Hero in partnership with Harley that came out with that bike. Also, you had Bajaj Auto in tie-up with Triumph that came out with a bike. And there you go. That is Siddharth's last response. It is Bullet 350 that's being launched. Also, you have comments coming in from the Economic Times as well, where Siddharth Lal has actually said that premium bike sales could double in the next 5 years, and sales are rising at twice the pace at the entry-level models. Also, remember that the Royal Enfield, they are actually launching a refresh model of the Bullet model that is today, Bullet 350. Also, remember, Bullet model is 17% of the volumes as on September 1st for the company. Also, Bullet is an important product for Royal Enfield. If you look at it, most of us would know it as Bullet rather than Royal Enfield, isn't it?
Absolutely, yeah.
You call the bike by default Bullet, whichever model of Royal Enfield it is, Bullet. But yes, Kunal, isn't Bullet your favorite too?
Not really.
Not now?
Not really, Cheryl.
It's Harley, isn't it?
Absolutely.
So that's clearly where the competition comes in from there as well. And when you talk about the competition that is there for Royal Enfield, and how the performance has been, because that was a bit subdued till Hunter came in, the volumes are very subdued. So Bullet, there were a lot of hopes on this one as well in terms of volumes and where that could go. So surely an interesting launch that is coming in here from Royal Enfield, and that's what we're going to keep an eye out on. Now Kunal has picked his Harley, but me and Cheryl surely know Bullet as
yeah, exactly. Royal Enfield, Bullet, everything you talk about Royal Enfield is by default Bullet, but yes,
correct.
But
that's how it's looking like.
Yeah.
But I think on that note, we're going to sip into a short break, viewers. But don't go anywhere, because after that, we will be continuing with more of your stock-related queries.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking all of the stock-related queries. This one is coming from Rajendra, writing to us from Bangalore. Kunal, for you, can he buy ACC at current levels for the short term? If not, then which stock should he look at?
Well, I would not be too much enthused with the charts for ACC. I think it's a very sideways chart. The stock is moving in a very tight kind of a range. So I'm not sure the rationale for buying ACC. But if you're looking out for something which is other than the cement basket and you are ready to go with a bit of a mid-cap name, then I would recommend Havells or Voltas. These are two names which are showing signs of a breakout for themselves. So they could be much better bets.
Okay, Kunal, one more query that is coming your way, and this one is coming in from a couple of anchors. One of them is Mrs. Naidu, one Ms. Motiwala. That when should we be expecting and targeting the samosa and sandwich party, Kunal?
I'm not sure which anchor you're talking about.
But we are waiting and we are hoping for a target date for this one. But Kunal, then moving to the actual query that we have and hoping for this one to get resolved as well. But Ananta Krishnan from Madurai has wants to know that they bought 150 shares of Bajaj Electricals at a price of 1,585 rupees. What is the short-term target for this?
Well, I would suggest to hold on to the stock and from a short-term target point of view, I would look at maybe 1280, 1300 as a target range for Bajaj Electric. I think that's a chart which looks attractive. It's trying to make a comeback again. The previous major multi-month resistance for the stock is around 1300 mark. So that's where you can keep a target.
All right, a lot of questions pouring in for Kunal. As you all can see, he also gets a lot of questions off air as well from all of us. But coming to you, Avinash, then this question is for you. I know we will not ask you for the samosa sandwich party, but this one is coming in from KV Rao, and he wants to know about Schaeffler India. He has 40 shares at a price of 2,930 rupees per share, making approximately 7% profit in this particular counter right now. So he wants to know, should he add some more of this particular stock right now, because after it kind of hit much more higher levels than where it is currently, he's seen some sort of a decline in this stock. So do you think it makes sense to average out, buy some more right now of this particular counter, and also hold on to it for the next 3 to 4 years?
Yeah, I think, Cheryl, you can definitely hold on to Schaeffler. See, this is a MNC company which is into the bearing market. And I think in India, there are very few companies which have the technology and the reach which Schaeffler has got. If he has a 2 to 3 year kind of time horizon, definitely looking at the buoyancy in the automotive sector and plus the industrial sector where Schaeffler, supplies its bearings, I think definitely this could be a good portfolio pick for him. Keep a long-term view, and I think a lot of wealth creation can happen even from the current levels.
The next query, and Kunal, this one is on ABFRL, and the viewer wants to know that if they have 200 shares of ABFRL or long term. Now they've already been holding for a while, but should they consider maybe to move out of this and buy something like an Arvind Fashion, and at what levels should they look if they have to switch?
Well, I'm not sure whether switching at this point could be beneficial for from ABFRL to Arvind, because ABFRL has corrected very sharply. Arvind, on the other hand, has managed to see a very good rally from, I think, levels of sub 100 to 167 where the stock is trading right now. ABFRL, on the other hand, from 350, the stock had corrected towards 185, 186 mark. So I sense that maybe the best and the worst could have played into the stock price respectively. So I would probably expect that stay put with ABFRL at least as of now, because if the stock gets into any kind of a recovery, you could be looking at 350 as a possible target for the stock, which is the previous year high for ABFRL.
Okay, Avinash, a tricky question coming your way. This one is from Kaushik Mitra writing to us from Mumbai. He wants to know whether he should hold on to Vodafone Idea shares. He's already holding the counter in his portfolio at a price of 7.67 rupees per share.
So Vodafone India, I think, whatever profit the investor is making, I think he should book out and take the profits off the table. This is a company which is consistently losing customers, which is, making losses every quarter. I would suggest that, in the telecom space, this is the weakest player. And I think if he's made some decent money here, book the profits and reinvest it in some good quality name, that would be a better strategy.
On that note, let's get started with the rapid fire then. And Kunal, the first one is from Jay Krishnan from Kerala. And they want to know any stock that you could name in the specialty chemical space that would be attractive to buy at current levels for the medium term?
SRF and Deepak Nitrite are two better bets.
All right, this one is coming from George from Chennai. He wants to know what's the prospect of Urja Global shares. He wants to know whether he can expect a return. He has 6,500 shares in loss. Avinash?
I think he should exit.
Kunal, Lupin, how is that look? The viewer has 50 shares at a price of 1,200 rupees. What should they do, hold or exit at current levels? That's from Mahesh.
Exit and look to buy back closer to 960.
All right, this one's come from Veena from Bangalore, holding for the longer term for 5 years. She has BEML in a portfolio, Tejas as well as Halden Glass. What's your take, Avinash? Out of these three, all three to be kept for 5 years?
Yeah, I think Tejas and BML definitely should be held on. Halden, I think, is a much shorter kind of time frame bet. over the next, say, 12-15 months, one could expect a decent risk reward.
Kunal, Indu is holding Dixon Tech and making an 11% profit. Would it be advisable to add more at current levels?
Well, you can just hold on to the existing quantity as of now.
Okay, Mr. Reddy from Hyderabad is asking a good dividend and a bonus receiving stock that he can look to invest in. Avinash?
I think you could look at REC, which is a decent bet, a good dividend yield stock, and plus a growth kind of stock.
Avinash, Kaji has bought Persistent System at 4,700. Good time to book profits now?
No, I think looking at the kind of scalable opportunity and the kind of performance, I would suggest that if you can hold on for the next 6 to 12 months, this is one of those IT product companies which should do well. So I think continue to hold.
All right, Kunal, Gopal Krishnan is asking, should hold or sell Adani Power, Suzlon, HCC?
If you're in profits, book profits.
Avinash, we have PV and Rao from Hyderabad who wants to know on Dreamfolks, is it a good time to buy this for the long term?
Yeah, I think if he's got a time frame of at least 2 years, I think Dreamfolks could definitely be acquired. Keep a long-term view.
Okay, and that was the last query for today. Thank you so much, Avinash, as well as Kunal, for joining with us. And thank you so much, viewers, for sending us all your queries. But with that, we are absolutely out of time on this edition of Buy Now, Sell Now on ET Now. But as we bid goodbye, the signs of economic recovery remain resilient in the first quarter of FY24. GDP for April to June quarter has come in at 7.8%, which is a 4-quarter high. Let's listen in to Ashish Kumar Chauhan, the MD and CEO of NSE, on the take on GDP figures. Listen in.
The first quarter GDP numbers for the financial year 23-24 have been released. The GDP growth rate has come out at 7.8%, which is a stupendous growth rate. With this, India has become the fastest growing large economy in the world. US numbers have been around 2%. China is also expected to be in similar range and cooling down. India is now basically going to be the engine for world's growth. And this quarter, the services sector has grown more than 10%, which has been in a way the center of growth for India for quite some time. And also the investments is at 35% overall. I think India is building for the future so that faster and faster growth can be achieved.